Hello friends, I am Sushil. Welcome to my channel Stock Wizard. Let us today analyze the company name Bombay Stock Exchange Limited. Everyone talks about trading on Bombay Stock Exchange, but what about investing in it? BSE Limited, Asia's oldest stock exchange, is more than just a marketplace. It is a listed company with its own fundamentals, earnings, and future growth story. In today's video, we will dive deep into fundamentals, revenue streams, profitability, and valuations, and then move on to technicals, breaking down the charts, price trends, and key levels to watch. So, if you have wondered whether BSE Limited is just history or a golden opportunity for future, stay tuned till the end. Bombay Stock Exchange is an Indian stock exchange located at Dalal Street in Mumbai. The company facilitates a market for trading in equity, currencies, debt instruments, derivatives, and mutual funds. BSE, the first ever stock exchange in Asia, was established in 1875. It provides services like in trading and clearing services, in services to corporate services, in distribution, and the company also provides data feed, index services, software services, and training services. Now let us look at the fundamentals. BSE Limited currently trades at 2,320 per share, giving it a market cap of over 94,000 crore. Now here's the catch. Its P ratio is 59.4, almost identical to the industry average of 59.4. This means the stock is not cheap, but it is not more expensive than peers either. When we look at price to book value, BSE is at 21.3, slightly above the industry price to book value of 20.6. So yes, it is trading at premium, but that premium comes with performance. The real strength lies in its return. ROCE is 46.6% and ROE is 36, both well above the typical industry standards. Compare that to an average listed financial service company and the BSE is clearly generating superior returns. Even more impressive is operating profit growth at 142%, while the 3-year sales growth is 56%. These are huge numbers, showing not just stability but aggressive expansion. The priority score is 8, showing signs of strong financials of the company. Unlike many, BSE has virtually zero debt, with debt to equity of 0 and over 5,184 crore cash reserves. That puts it in extremely safe position compared to peers who carry same level of leverage. But here's the flip side. While the stock trades at 2,320, its intrinsic value is estimated at just rupees 749. That means it is overvalued on the fundamental basis. However, the investors may be willing to pay this premium for its monopoly-like position and future growth prospect. Fair value stands at 2,340, almost the same as the current market price of 2,320, showing stock is trading at a fair value. Now let us see the profit and loss statement. Let's break down the financial performance of BSE Limited over the last decade and see how its profitability has evolved into true growth story. Back in 2014, BSE sales stood at just 485 crore. Fast forward to the latest trailing 12 month and the sales have jumped to 3,403 crore. That's more than 7x increase in just about 10 years. Notice the sharp acceleration in the last 3 years, from 925 crore in 2023 to 1,568 crore in 2024 and now crossing 3,200 crore in 2025. Clearly, the BSE has shifted gears from steady growth to rapid expansion. On the profitability side, company's operating profit tells an even stronger story. While profits were fluctuating earlier, even dipping to 127 crore in 2020, the recent performance has been phenomenal. In 2024, operating profit was 711 crore and in 2025, it skyrocketed to 1,876 crore, with margins improving to 58%. This shows BSE is not just growing revenue, it's doing so with far higher efficiencies. Regarding the net profit and EPS, net profit highlights the real turnaround. From 160 crore in 2014, BSE has reached 1,596 crore in the latest period. That's a 10x increase in profits. Earning per share reflects this. From just 1 rupee 1.45 in 2014, EPS has shot up to nearly rupees 39 in 2025. That kind of compounding is what long-term investors love to see. Finally, what we can see, the BSE financial journey over the last decade shows a transition from flat cyclical profit to explosive growth in the last 3 years. Strong sales expansion, rising operating margins, and surge in EPS make BSE a powerful growth story. Let's quickly take a look at shareholding pattern of BSE Limited and see how it has changed over time. In June 2022, public investors held around 61.8% stake, but by March 2025, that number has dropped to 48.7%. On the other hand, foreign institutional investors have been increasing their share from 0% in 2022 to almost 17% in 2025. Domestic institutional investors have also grown their holdings and moving from 0.6% in 2022 to about 12.3% in 2025. This shows that big institutions, both foreign and Indian, are building confidence in BSE. Conclusion: what we can see is that the key takeaway is, while retail investors are reducing their stake, strong buying from the FFI and DII is supporting the stock. This shift often indicates growing institutional trust in the company's future. Let's look at the chart of BSE Limited and see where the stock is heading. I have taken a 5-day candlestick time frame for better understanding. The stock has been in the strong uptrend since early 2024, moving from below 700 to above 2800. Recently, it faced selling pressure near 2833, which is recently high. Right now, the price is around 2320. On the downside, we see strong support near 2086 and then around 1667. On the upside, resistance is placed near 2344 and then the previous high resistance of 2833. The chart is showing a fair price level of about 2375. This means the stock is trading close to its fair value zone. If the price stays above 2086, the trend remains positive and it could again try to move towards 2800. But if it breaks below 2086, then we may see further correction towards 1667. In short, BSE is still a long-term uptrend, but in the short term, it is consolidating. Traders should watch 2086 as the key support and 2344 to 2833 as the resistance zone. So here's the understanding the full picture. If fundamentally BSE is a high quality, debt-free, cash-rich company with strong growth. In financially, profits and sales have exploded in last 3 years. Shareholding pattern data shows rising trust from institutional investors, and technically the trend is positive, but near-term consolidating is happening. The only risk is valuation. The stock looks expensive compared to its intrinsic value. So the investor need to decide to pay a premium price today for the monopoly, power stock and future growth, or wait for the better entry point. This video is for educational purpose only and is not a financial advice. It should not be considered as financial or investment advice. Do your own research before investing. If you found this video useful, please do like, subscribe and share. Thank you once again.